This is Tips on Trading with Stephen Story. I want to talk with you today about some of the confirmation tools that I use together with Elliott Wave. Now, I use Elliott Wave as one of the core areas of instruction in my programs because Elliott Wave is, like I've said on other Tips on Trading videos, it's the vehicle to the market. It's a roadmap that helps you literally navigate where the market's going to twist and turn and when. Now, is it perfect? Is it a standalone tool? No. I love Elliott Wave. I'm a good Elliottician. I do wave count probably as one of my greatest gifts as an instructor and as a trader. But I don't like using it by itself because it is subject to interpretation. You do have to look at alternate wave counts at times, especially during corrective phases of the market, which is about 70% of the market. So because of alternate wave counts and because sometimes Elliott Wave is not as easy to read under certain conditions, I want to have confirmation tools. I use at any given time, probably 8 or 10 confirmation tools all at one time. And I've become so familiar with them that I can just glance at them and read almost all of them simultaneously. Or I can choose to analyze one of them more specifically at a time. So let's take one of those tools right now called Parabolic SAR. Now, Parabolic SAR is one of my favorites. I use it to help give additional confirmation for wave count, but it also gives me additional insight as to how long a trend is going to last, how much further that trend needs to travel as I'm watching the Parabolic SAR arrows. They look like little dots on your charts, but they're actually little tiny arrows, and they're pointing in a direction of the flow of the market. If those arrows tell me one thing on a certain time frame, that things haven't reached a certain position, say with Bollinger Bands or a simple moving average, I can tell that we have further to move along in that trend. Especially when my wave count is a little bit confusing sometimes and I need some additional assistance. Well, Parabolic SAR is something you should take a look at. It takes some time to become familiar with it. You have to learn how to use it. And it also can be coordinated with other types of indicators that are also fairly common in the market. Watch some of the additional tips on trading videos I'll be doing. I'll probably do a little series about some of the most common indicators that I'm going to work with or that I use in my webinars. In fact, if you'd like to see those in action and like to see me using those in market analysis and forecasting in real time, then you can simply visit my blog site. On my blog site, I provide all kinds of information there, including links to my free webinars. I do those for the public. My students attend. And you're welcome to see me in action and watch to see how I use Parabolic SAR and several other indicators as confirmation tools to Elliott Wave count or alternate counts, and as a further indicator when my wave count becomes a little bit confusing and I need some additional confirmation assistance. I'd like to talk with you about a technical indicator that's very common in the market called RSI. Now, RSI stands for Relative Strength Index. This is measuring the relative strength of the momentum in the market. Now, RSI is not the only momentum indicator, but it is one that I use on a fairly common basis because it allows me to set settings at different places according to what types of momentum trend lines that I use within the RSI. RSI has overbought, oversold conditions that it is testing or indicating that rise either above a 70% line or below a 30% line. Above 70% is when it starts to be, or at least to appear, more overbought. When it's under 30%, it's more oversold. Now, does that tell you when the trend is going to end? When it comes above those lines or below? No, it doesn't. Because very frequently a trend will continue much, much further in the price action than what you might think when you're looking at the RSI. So you have to learn how to use the RSI. But RSI measures momentum, and so like the stochastic indicator, RSI measures it with the angle and the sharpness of a line as it turns up or down. It also measures it by the shallowness of a line as it is creeping or moving through the center of sections between those 70 and 30% lines. I like to use RSI to represent the wave count more, so I often place it at a period of 7 in the settings. When you go into properties for the RSI, it will give you a place to change those settings if you want to change them away from the default. I typically place my RSI at a period of 7. The 7 allows it to have more detail shown in the changing movement within the RSI line. That RSI line then creates high and low points, or peaks and troughs. Those peaks and troughs will also show trend lines, actually momentum trend lines that you can draw either on the upper side of the RSI peaks or the lower side of the troughs. And when you break through those trend lines with a sharp turn or angle, those trend lines will show you breakout patterns. Now, this is something that I think is very, very significant. The momentum breakouts are probably one of the most important things you can ever do with a momentum indicator, whether it's the RSI or some other momentum indicator. That trend line breakout, typically, once you learn how to read it, will give you a very strong trade you can participate in. Now, there's nothing like seeing this in action. If you'd like to see me show you how to use the RSI, or get a chance to watch momentum trend lines being drawn and to see how those breakouts occur and how you can then coordinate them with different time frames, come to my blog. My blog will show you the links where you can attend my webinars. I do them Monday through Thursday. They're usually about an hour and 15 minutes, maybe an hour and a half in length. And you can watch me do wave analysis with Elliott Wave and how it also combines together with other indicators like the RSI, Relative Strength Indicator. Another indicator I'd like to share with you that I use in connection with my Elliott Wave count is called the standard deviation. A standard deviation is a single line. It's a very powerful indicator for me. I don't use it as a standalone, but it's very important for me because it shows the momentum in the market and a turning point when that momentum is about to change. It doesn't have a lot of waviness in this line like you might see with an RSI or a stochastic. It doesn't represent necessarily wave count for me, like you might see in Awesome Oscillator and others. But the standard deviation is a single line that will drive upwards, and when it's turning upwards, it indicates momentum is stronger for a trend. When it begins to round off and level off, and say it comes up the top, it begins to turn its angle, it shows you momentum is slowing, the trend is coming closer to an end, and when it levels off, the trend is over, and it's going to make a turn. I use this in connection with other indicators that allow me to get further confirmation, together with, say, Awesome Oscillator, RSI, and Stochastic, that a trend is reaching an end and I'm ready for a turning point. Now, learning how to recognize the beginning and the end of a trend is probably one of the most coveted pieces of insight you can ever obtain as a trader. A trader wants to know when his trend is going to run out, so he knows when to close his trade. He also wants to have a better idea of longevity in the trend, so he knows when not to get out to take advantage of more of the trend. Too many traders are scared out of trends because they can't tell when it's going to end. The standard deviation is one that helps you to tell the beginning and the end of a nice breakout trend, all according to momentum that is read there. This is another indicator that I use in my webinars. You can learn to access those on my blog site. Just click on the links there that I provide in the blog, and you can attend a 90-minute webinar with me Monday through Thursday. I'll show you how to use the RSI, Stochastic, Oscillator, all together with the standard deviation momentum indicator to see if you can learn better how to tell the beginning and the ending of trends and breakouts.